A Fox Business Alert, the kinds of huge gains in the Dow like we saw today used to be shocking news, but not so much anymore. With still a month to go in 2012, we have already seen 95 triple-digit moves on the Dow out of 231 trading days. And in all of last year, the whole of last year, another wild time for stocks, by the way, the total was just 76 days with swings of 100 points or more. So has this dizzying volatility made investing a turnoff for the average investor? Let's ask our power panel. We have Elizabeth McDonald, Ari Zoldan, and Jonas Max Ferris. EMAC, I can't get my head around this stuff, and I deal with it every day.
I know. It's like stop the markets. I want to get off, right? So, but what's really scary, I think, for individual investors, too, is what Goldman Sachs is saying recently, and that is saying that not the economy, not M&A activity, not IPOs, not entrepreneurial activity, but the government is actually moving headlines like never before. And so that's kind of scary. What are we going to have next? The Federal Reserve giving forward guidance like companies give on their earnings?
Ari, I want to skip you for a second, go over to another trader here. Jonas, I mean, you make your money making trades that average people don't feel they're capable of making. I would think your business is doing pretty well right now. Don't people come to you rather than invest their own money?
They do, but I will say the investor is largely they don't want to be in stocks. Most people I come across now don't actually want to take any risk at all. They want to take a very little stock market risk. And if you look at mutual fund flows, which is what I deal in, is they've seen outflows basically every month for a couple of years now. This kind of casino market that doesn't seem to go anywhere seems like a losing game to the individual investor, and they don't want to play in it anymore. And that's well,
Ari, you are an entrepreneur par excellence. How do you develop any kind of sensible business plan with markets that have this kind of volatility?
It's very hard to do. I mean, you're seeing these 500-point swings every single day. So, today is great. Tomorrow it's probably going to swing back down. It's scary, especially when you're building out a business plan. You don't know what's going to happen in 2 months and 3 months, let alone what's going to happen tomorrow morning.
Particularly, I would think about credit.
Correct.
Credit is really key to you guys, and you don't know whether there's going to be another credit freeze-up, do you?
We have no idea, and I think a lot of people are concerned. And these swings are just, I think it's just the beginning. I think it's going to get a lot worse also.
By the way, we had a lot of rumors today about whether we were close to a credit freeze. Richard Fisher says, no, we weren't, that this was a preemptive move by the Fed to create something like that. What do you think? Do you think that's true or not?
I think Fisher has been dead on. You've been breaking news with Richard Fisher of the Federal Reserve. I don't think what we're seeing is a liquidity pumped into an insolvent system. It's a solvency issue with the banks in Europe. In other words, they just
don't have enough cash in their vault.
They're trying to pump dollars in there to lubricate the system. But as for the individual investor, where do we see the action? A lot of investors are picking up good dividend stocks like Johnson Controls or food provider Cisco, which has 10 months of dividend increases. That is proof positive that they're enjoying cash flow that they can return to investors.
Is that what people are doing, Jonas? Just getting with really safe stocks that are household names?
I think they bail out on stocks. They still actually favor foreign stocks, which is kind of weird because foreign markets are the eye of the storm. They've fallen more than our market.
You favor them? Would you buy a foreign stock right now?
Lately, I've been increasing my foreign stock allocation. But I still focus, well, because they're down more than U.S. stocks, and it's a crisis, and I like to go where there's panic. But I will say I still think for safe investing, the U.S. stock market is still much safer than emerging markets, than even large, France, Europe, whatever. I think there's some opportunities on a rebound in those countries, but if you want a safer stock play, it's large cap U.S.
Ari, do you keep stocks? Do you have a stock portfolio?
No, I don't.
Zero.
I'm
you
standing
put all
on the
the money
outside
back into your business,
into resources and stuff, 100%. But I mean, just watching what's going on out there, it's scary. And I don't think it's fear, it's panic. These are real numbers. What's happening in Europe, what's happening overseas, what's happening on the political landscape right now. I think it's going to get worse. I think it's going to get a lot worse.
What do you think is going to happen with the markets? I mean, do you think the markets are going to crash the way they did in 2008?
It's very, very likely, and I think a lot of people are concerned right now. They're all pulling out their monies on the sidelines right now.
I don't think the government's going to let the markets crash. Number one, because they've been stepping in since 2008 to help. I think that you're going to see probably a crack up of the eurozone, a break up into the southern, countries having their own eurozone type system. So what do you do in that event, right? If the eurozone breaks apart.
But that's also a problem, Liz, right? If governments are stepping forward and actually putting a Band-Aid around the economy, I mean, it's sort of a false positive.
And let me just put it to you. It was September 2008 when the government came in with the TARP plan. I remember it well. But it wasn't until like 6 months later when the market bottomed out, went down to, what was the Dow down to 6,000, 7,000, something like that. So it took them 6 months of active intervention before the market actually turned around. We may be in for a long downturn, no?
Right, although they've been trying to bail out Europe for a couple of years now. They're just not coming up with the right mix of policy. I mean, we almost had a panic just a few days ago before it picked up where there was whole countries that really couldn't borrow money from anybody except central banks and government entities. These are whole governments, Italy, it was becoming France, where they couldn't borrow at like single-digit rates. And a big debtor can't transition to that. You're going to have a crisis. And unless that's dealt with, ultimately, it's never going to go.
I think instead of painting a picture that the Federal Reserve pumping dollars in, Europe needs to start collapsing its banks and that are on the brink, instead of doing these Jedi mind tricks that the government is doing to help the markets.
That's something else that Richard Fisher says as well, so great minds think alike. All right, thank you, gang. We'll hear more from our panel in just a moment. Only a big day for stocks, thanks to the Fed's printing press, but what can we expect tomorrow? Our power players are back. Jonas, your crystal ball tells you.
Without any major surprises, we've had a lot of them this week that we didn't see coming. I'm saying it's treading water until Friday, waiting for the next job report, see if that is going to deliver the kind of oomph we got early this week, which could lead this to be a 10% Dow week, I think is possible.
Man, Ari, what do you think?
I think we're going to see people retreating. I think people are going to be staying far
so
away
as good
from
as
the market,
it was today, tomorrow it's going the opposite.
And we're going to continue to see this, I think, into 2012 also.
Which means grab your Maylocks and double dose it.
Grab your wallet.
This is just the beginning, I think.
Grab your wallet.
I think we're headed for some real trouble.
Wow. What do you think?
I'm not saying grab your wallet and head for the basement, but, you know, those 95 triple-digit moves, some were down, so we're going to have bungee cord swings into a tight training range. I don't think we're going to break below 10.3, but, you know, in the future, but we're going to stay tight between 11.3 and 11.9, I would imagine.
Just two words, danger, opportunity. Some people see this as a danger, as clearly you do, Ari. You see it as a danger or an opportunity?
Always an opportunity. I'm a long-term bull.
Jonas?
I think there's more opportunity than danger, but they're both very severe at this point.
And Ari, you see more danger than opportunity.
Danger. Yeah.
Thank you very much, gang. Appreciate it.